I tried to open a lot of doors for Andy that were in CVCs and corporates. I know he ended up talking to Vanguard, Visa, Fidelity, just the ones that I remember right away, but they felt that the traction of Benny is just a little bit too young at that point. As Andy said, they made friends, but they the money just wasn't coming in at that point. So it was like, okay, well, we are a fintech first fund. We've done a lot of work in this space. We kind of just need cash to kind of fill this round out and keep and have Andy go back to business and start building instead of spending a lot of time, fundraising and just tying loose ends.
I'm not sure if there's a learning, but it was, I think optimistically we would have loved, I think there was that strategic investor in a corporate, but I think just with the time and just like get back to work, like that's really what I wanted to do. And it's like, okay, funding, let's prove it out. Everyone's going to bring value to the table that's doing this, and then build those relationships over time. So the next time we go out and do this, we're ready to rock and roll.
Yeah, I mean, what a value add of just don't worry about the rest of the round. We'll figure it out, and you go back to building the business because that's only going to benefit us all. That's amazing. I love to hear that.
Welcome to Inside the Deal, the podcast where we explore how funding rounds come to fruition from start to close. I'm Adam Hardy from Sandhill Markets.
And I'm Steph Moy from PIN. Our head of growth, Daniel Wiegand, and I are teaming up to host this podcast with Sandhill Markets. Together, we sit down and discuss the intricacies of how venture funding rounds come together.
Tune in to hear how investments are formalized from both the founder and investor perspectives, from initial conversations to final close.
Whether you're an investor or founder curious about the fundraising process, please enjoy the episode.
Hello, everyone, and welcome back to another episode of Inside the Deal. I am your host, Daniel, and I'm joined today by Andy from Benny and Nandini from FFBC. Thank you guys so much for being here and taking the time today.
Of course, happy to be here.
Yes, thank you, Daniel.
Yeah, of course. And so, Andy, let's start with you. Just so everyone has context, would love to hear a little bit more about yourself, your background, and what led you to founding Benny, and then a little bit more about Benny as well.
Yes. Hi, I'm Andy, founder of Benny, and we're on a mission to help employees unlock the $80 billion they're leaving behind from their money-making benefits. So right now we're specifically focusing on a benefit called employee stock purchase plans, which the benefit of those is, hey, employees, you work at a publicly traded company. So Daniel, think things like Microsoft, NVIDIA. You get to buy company stock, but at a discount. So Daniel, let's say you work at NVIDIA. Just to put some real numbers behind it to show impact is like, okay, you can contribute $8,500 from your paycheck over the next 6 months. So like comes out to like $700 is being withheld from your paycheck. At the end of that 6-month period, NVIDIA is like, awesome. You've now put in $8,500. We're going to buy company stock, but at a 15% discount, returning to you $10,000 worth of shares. So you put in $8,500, you get back $10,000 worth of shares. That's an immediate gain of $1,500. Super awesome. The downside, employees often struggle to come up with that $8,500. That's where it was getting funded the $700 per paycheck. So no matter how much money you make, having $700 missing from your paycheck takes a big hit to your cash flow. So that's where we come in. So we solve this by connecting employees to the financial institutions like credit unions and banks that serve their employers. We help these institutions offer what is like a small dollar line of credit that integrates into the Benny platform, turning them into cash flow tools. So essentially, every time $700 is missing from your paycheck, $700 is drawn from the line of credit, essentially bringing you back to cash flow neutral and allowing you to go in and max that benefit out without it impacting your take-home pay. So you get to fully leverage your ESPP benefits without impacting that take-home pay. So yeah, we've done that for quite a few. We've done a few $1 million of funding, unlocked hundreds of thousands of dollars of gains for employees at 30 different publicly traded companies. And yeah, as far as like getting started, you asked about, Daniel, is like, I was one of those publicly working at a publicly traded company employee, and I didn't have the money to do this. For me, it was $500 per paycheck. And I was just like, crap, student loans, rent, daycare. I don't have $500 per paycheck to go missing. My background's in finance. So instead of, having the money come up with it, what I did was tracked how much I was missing out on and just kind of wallowed in my pain of like, oh, cool. There's, an extra $1,200 I missed out on, an extra $3,000. Eventually that changed. I was able to max it out, realize like this thing is, it's incredible, and started building out content myself. It was like, I want to spread the good word. So figure out how to build a website, started sharing information, found some strangers on the internet. They needed some money to fund their stock purchase. So, I remember looking at my life partner at that time and just being like, hey, this guy in Texas needs $20,000. Sent him $20,000 and it worked out. So that's kind of how Benny got started, was just like, I had the pain and started funding these stock purchases with my own cash and just kind of rolled from there. So at the end of the day, it's all about really, what we're up to is getting employees the tools, which is like the money and education needed to maximize and actually start making money with these benefits. And obviously to get here though, we've had incredible support from investors who recognize this potential early on. So yeah, I think I hit most of your questions there.
Yeah, no, that was perfect. It's actually funny. I was just talking with a friend maybe last week about this exact situation. And he was like, I really want to take advantage of this opportunity, but like, I just don't have the cash right now to do it. And they're leaving money on the table. So I totally resonate with that. And so Nandini, tell me a little bit more about yourself and FFBC.
Of course. So hi, Nandini Agarwal, principal at FFBC. Previous to this, I was at another venture fund, Florida Founders, based out of Tampa, doing B2B SaaS, C to Series A investing. And in some part of life, I was also a founder of a medical device company. And backgrounds in finance and accounting, worked at PwC, Goldman Sachs. I'm very excited to back the next wave of startups and technologies. So very, very happy that I get to do this job on a daily basis. To tell you more about FF is a pre-seed seed investment firm investing in technologies across fintech, insurtech, drones, robotics, AI. Pretty agnostic investors. We do a lot of B2B SaaS, a lot of consumer investing, and have been doing that for the past 16 years across 6 US funds, as well as 3 European funds. So very, very great brand here and very lucky to be part of this enterprise.
Fantastic. And so curious about how the relationship between you guys started. So Andy, what was your, reach out strategy? Was there a warm intro? Was it cold? How much thought went into that? Can you talk a little bit about how that all went down?
Yeah, and it was actually kind of a trip, just like reflecting. I hadn't really done that before, like, oh, how did like this all happen? So really enjoy just kind of like going back to emails like, okay, what would actually happen? So Nandini, keep me honest here too. So this was kind of a long game. It was more of a warm intro or intro to intro process than it was more so than like cold outreach. So it started through a connection we had, a mutual friend. This was a venture fund called Circle. And what makes Circle unique right now is that their LP base consists of credit unions. And so they focus on investing in solutions that help credit unions evolve. So Liz there at Circle was really into what we were building at Benny. I was talking to her. But one of their criteria is like, you have to be partnered with a credit union. So we didn't qualify for funding. However, I think we left enough of a positive impression because, at the end of all my investor conversations where, I hit a no, it was always like, okay, cool. Like, who else can you introduce me to? And I know some founders are like, no, like, why would they introduce me to someone if they just said no? It's obviously not them. My take was like, the worst thing they can do is nothing. And like the best case is this, and so, I have my own anecdotal evidence of like, this works because, she ended up reaching out to FFVC. And so I think that's where it hit John and Nandini's desk. And so, I think it speaks to building that genuine relationship with Circle. And like, I still talk to them to this day, leaving a lasting impact. So even though that things don't align today, it's like, hey, where does it go down the road? So this kind of corresponded to me doing a lot of outreach too, where our pre-seed investors, which was Matchstick Ventures, fantastic fund, focuses on the North and Midwest. They were making intros to funds we were targeting. I was doing cold outreach on my own. And so what was interesting is I got an email from FFVC team saying like, John Frankel and Nandini would like to schedule a call. I was like, okay, like, what is this? I wasn't immediately sure like who they were. I'd gone through like hundreds. Yeah, I was doing like a full CRM type, going through all investors. And so like, there's a lot of names in the CRM, so I was like, okay, is this someone doing, some competitor research or something? Like, I wasn't really sure. But after doing a bit of research, I quickly realized like, oh crap, like, this is a big deal. They had been a part of like Parento, Rhino, Sure. I think that, StockTwits was there. So I was like, okay, this has potential. So that's kind of how it all happened to come through, is through a mutual investor, friend. And, I'm sure we'll get into like the meeting stuff and then how all that happened, but that's how we got introduced.
Interesting. I feel like you don't hear that often, where it's almost like, I mean, it was an intro, but kind of inbound to you, Andy, which is probably like Christmas morning as a founder.
Totally.
Which is very unique. And so for you guys on the FF side, from that intro, what was it about whatever they sent? Whether it was a deck, I actually would love to hear more about like what was said or sent in that intro. But what was it about what Andy was doing at Benny that got you interested enough to even, I guess, not only reach out, but take that first meeting?
Yeah. I am actually happy to share a bit more of backstory, just as, this is a podcast focused on fundraising, just to give you a little insight onto how things work on the investor side also. But I was, when I was still at my older fund, I had attended this one conference out of North Carolina. It was one of those hybrid times. It was still like 2021, and conferences weren't really planned all that well. And this conference was not planned well at all. The hybrid thing wasn't working. There was no Wi-Fi. But all I did was make 2 investor friends there. And one of them was an individual named Patrick Berry, who was at Flyover Capital. And he and I got together and used to really jam about, or still do actually, jam about wealth tech in general. Even though I used to, have a monthly call with him, and I've had one with him for about 3 years now, we haven't had a chance to work on anything together. But at one of these calls, he was like, "Oh, we've always enjoyed our conversations and this deal sharing. You should meet my friend Liz, who is at Circle Fund." And that one call with Liz ended up getting the investment deck for Benny. So just how, you never know what connection and what repetitive conversations and string of conversations, even though you don't feel like there's immediate ROI from an investor perspective, something somewhere serendipity and gets you what you need, which is a deal out of it. So a little bit of background there, and Patrick's actually raising a wealth tech fund now. So, and the team at Flyover are incredible. So huge shout out to them and to the Circle Fund as well. Speaking specifically about the deck and what really worked out there, it was just the simplicity of the way like Andy had put all of his information down there. There were good visuals. It was easy to understand. From especially as a fund that has done lending before, as part of our portfolio, we understand what that means. We've done insurtech, we've done wealth tech, general fintech. So it felt like it was playing into a lot of our strengths, and we could rinse and repeat some of the learnings that we've had from our other portfolio companies. I know Andy mentioned a few, but we are in StockTwits, we're in Adapar, we are in Parento, Shore. So just a lot of companies that we've done similar theses work before. Thinking of specifically for Benny, it was also our founding partner, John Frankel. He spent 21 years at Goldman. So he understood a lot of the intricacies, being on the side of financial wellness and in general fintech. So it felt like something that we could be additive as investors beyond just capital. I hope that answers your question.
No, that was perfect. Okay, cool. So let's fast forward to the first meeting, which I think is what a lot of founders out there are really looking to uncover. So, Andy, what was your strategy going into that first meeting? Was it just you? Do you have a co-founder? Did you bring a co-founder? Did you, go through a deck? Tell me about that first meeting.
Definitely. Co-founder, yes. But all the fundraising was on my plate as he was building out product. It was just like, okay, let's segregate duties here. That way I could focus fully on getting the money in the door. So for that first meeting, I was focused, I think, on having a conversation more than strictly presenting a deck. I'm 90, Nandini, remind me, I think I had the deck up, but I think it quickly, if my memory serves me correctly, we quickly moved away from it and just dived into a more fluid conversation. I remember sharing just like a few, we had just collected a few customer testimonials that were like super impactful to me. I was just like, cool, I'm going to throw these in. I'm going to share them. It's like, hey, this is what, a user said. And it was just like something that was truly touching. And cause like we're just to thinking about that too, is like we had helped this person earn the first like $1,500 of their career. They were, immigrated here from Central America. And it was just like, they're like, I've never had this opportunity before of where someone is actually providing me money to go make money. And it was just like this cool experience for them. So I remember sharing that. And yeah, so I definitely prepared though. It was just like, I always have because this was definitely during like the evolution too of a lot of video chats, right? Everything's done video. So I had all my notes on. I always have, like my dual screen. So I have my notes right there so I can kind of present through it. And then my second monitor. So my screen's over there, allowing me to kind of keep my thoughts moving, make sure I'm hitting the right points, keep it short and concise. But yeah, my goal in that meeting though was really just trying to get a feel for them. Especially since they kind of reached out to us. I still had a healthy level of skepticism of like, okay, like, is this, they're about to invest in a competitor. And so they just wanted to learn about, what else is in the space. And so, I was just like, hey, like, let's go in, see what this is about. Obviously, I'm going to try to knock this out of the park. Like anytime you get a conversation, like, yeah, put your best foot forward. And worst comes to worst is they, go invest into another company in the same space, but that's helping that space draw another data point that you can kind of leverage for your own. So it's like, in the end, it was like, okay, I want to put my best foot forward. That's how I prepared for it. I had a deck up, but I think it quickly evolved into a fluid conversation. And, I think we ate through the 30 minutes that was on the calendar really quickly.
And for context, where were you at in the fundraising process? Was this pre-seed, seed? Did you have any capital committed? Where were you at with that?
So this was our seed round, and this would have been beginning of the year. And so we had some dollars committed, but it was very much like we hit on it. We were our core business at this time was a lending model. It was kind of during a very interesting time when startups being funded was, and then having a lending model during a high interest rate environment was another, like it wasn't the best time to be out fundraising. So a lot of folks were interested. It's like, hey, you're creating money, but go find that lead. A lot of that was going on, Daniel. And I was just like, for the love of all that's good, let's get that lead in. And so we had raised a pre-seed round. So we had traction. We actually did a Techstars accelerator as well. And so we were moving in the right direction, but it was just like, we need to keep this moving. We need to get that momentum. We're getting these soft yeses. And so we had a couple $100,000 committed, soft committed at that point in time. But it was all kind of, at that point, we were really looking for that lead. And actually, you mentioned Mr. Barry before, Flyover Capital. I remember talking to them. It was, yeah, so that's where we were coming in. We had talked to a lot of investors. We had actually started, and this is, if I'm just thinking about it, we had kicked things off kind of contrary to what a lot of people suggest, which is the end of a year, kind of during that November. And so we definitely hit that lull, I think lost some momentum where people just went on break, and that hurt us. So like, to me, that's real. Momentum is lost during the Thanksgiving and then December holidays. So that was kind of a big learning on my part, was just like, man, that's not, I had to kind of restart the momentum from a January 1st, getting back onto people's calendars and, trying to drive that momentum and trying to bring all investors at a single point in time. From my perspective, trying to draw demand in to kind of make sure we are getting the best deal possible too. All things we were working on and like learned, by not doing it the right way.
Yeah. Before we move over to Nandini, I want to touch back on one point, which was like the level of skepticism, right? Where you were a little unsure. How did you approach that? Because I hear that a lot from early stage founders where like, ton of founders make the mistake of, oh, will you sign an NDA? We don't want to give away our secret sauce. So how do you sort of like balance, telling FF what it is you guys are doing and how you're unique and how you're doing it versus, having that level of skepticism? Or did you not really care at all?
Yeah. So this is something I've been kind of working on, fighting, whatever you want to call it, from the earliest days when I was in my basement doing this by myself, of not telling anyone because I'm like, this is so cool. This is so special. I didn't get anywhere, right? Doing that. As soon as I started telling people, it was like, holy crap, like, cool. Now I have to quit my day job because like this is getting legs. And so I realized kind of, a year into, because I was building this on the side, nights and weekends, that like actually talking to people is huge. So here, there still is some like I said, there was still some skepticism, even though I had that experience prior where it's like, okay, I need to talk to people. What I kind of rely on is, this is a capital intensive business. So as much as it's like that is a nice barrier to entry, it also means I have that barrier as well. But so like, yeah, I cared about it, but it's just like I had to put it aside. Where it's like I'm not going to temper what I'm going to do here, because guess what? FFVC could go get my deck from any of the other investors I've shared it with. They can get the lowdown from anything else. Like, it is a community out there. And so I took the approach of, I would rather shape the narrative from my own mouth versus having them hear it from someone else. And execution, right? Is like, that's the hard part. So if anyone wants to take the idea, go for it. Like, you got to be crazy enough to do it. So that was kind of my mentality, and I still work on it, because like there is that thing that kind of pops up sometimes where it's just like, am I sharing too much? But it's just reminding yourself that execution is everything, not the idea is just there.
100%. I think it's a great mindset. And then, so Nandini, on your guys' side, how did you feel that first meeting went? What was it that, I guess, got you interested enough to take the second meeting? And if there were any hesitancies, what were they? And what did Andy do to eventually, I guess, dispel any of those concerns?
Yeah. So going back into time super quickly, I remember that afternoon, we actually had a time change on when the meeting was being held. And it was something like 1:30 is now 2:30. And it was like because Andy is in Wisconsin, we're in New York. So it's just like a little bit of confusion there too. So, but I remember we had to move the meeting last minute because something came up. And I know there's always a thing where like a founder is like, well, am I not important enough to hop on this call? Or the investor, like if the founder changes the time, is like investor is like, well, I should be prioritized here. So I think keeping a low ego and know that it's totally a numbers game on both sides is important, and not to take anything personally. Secondly, from our fund perspective, we are a very small team. It's and we try to do our initial calls with our partners. So it's not like a analyst and then an associate and then it goes to the principal and there are 15 steps in between, and then the partner will maybe, after months look at it and be like, no. We had John, who is our managing founding partner, on the call from the first time. And then from our investor side, and I think a lot of my peers do this, is have a little bit of a template document on the side while we are going through the initial pitch call to make sure that we get the information that we want to get out of the founder before we hop off. Just in the interest of time, just as like a gut check, like, hey, does this meet our investment thesis broadly? Like, how much money has already been raised? What's the burn like? What are the revenue growth metrics like? What is the customer concentration? What's the team makeup? So just some stuff that we can get from the deck, but some stuff that we would like to dig on a little bit more and make sure that things are fairly aligned before we get off the phone and make a quick decision. Because a lot of times founders want a very quick decision after maybe one or two calls and don't want to spend that much time. And if you're just going off on tangents, then it's not usually beneficial. That being said, I think remember from some of the concerns that we did have was like, hey, Andy's a first-time founder. Is this a risk that we're willing to take? I know a lot of funds out there have a thesis on only investing in founders who have done it before. Failed, success is separate, but just done it before. And then the other part was, again, being capital intensive. It was a high interest rate market. Will we be able to get the lending supply, the money? Are we okay with the lending business? Do we want to do one of these again? And what really helped us think through this was unit economics. The unit economics did make sense. And he, with his finance background, was able to dispel some of these concerns to be like, no, every time we do put out a loan, we are going to make money for our end client and for us. Like, it's a no-brainer for the client to keep coming back to us. And we also saw that in how less of a churn that he had in his customer pool. So it was good to see the stickiness very quickly and see that it's a product that doesn't exactly exist right now. It is not an asset class that has fully been utilized and has a lot of potential. Then from our side, we had to do a little bit of TAM analysis to be like, hey, what is the opportunity here, if at all? How many companies out there do stock purchase plans? Will they be open to having, a lender like Benny come in and give individual loans to their employees, and what those partnerships look like? And I know I'm getting a little deep here, but essentially it was just a lot of, hey, what are we missing? Hey, where can this go wrong? Hey, what are the assumptions that we're making to make this company a success? And what are the dependencies that we have in those assumptions?
How long did the process take? If you're willing to share that, and did you guys end up being the lead? I know Andy mentioned earlier he was really looking and searching for the lead, or were you guys not the lead in the round?
We were the lead. It did take us a little bit of time, pretty honestly, to get through the investment. I think, just thinking from a process point of view, it was not our fastest process. That being said, we had, like, Andy and I were constantly getting on calls to talk through the business model, to talk through product development, expansion. We also were pretty much syndicating the whole round together. So we had got, okay, a lead check of how much ever we put together, or we're going to put in this round, but we also had about, at that point, 65% of the round to be committed beyond us. So we ended up, at that point, bringing in Correlation Capital, which we have done a lot of deals with, and they decided to match the amount of money that we are putting into the round on the same terms, but they had to run their own diligence process, both on Andy and Benny and us, because they're a firm that underwrites the lead investor and their thesis as well. And then we had a few other angels come in, a few pro rata, and then just Techstars also, I ended up doing their investment. So it was just some of these nuances that we had to put together from both the fundraising as was a product overview. But we knew that going in, it went from, hey, we have an idea that's budding here and can go into several different directions, to Andy and I kind of coming together and making a 100-day plan as part of our diligence process. And then something for us to, from an investor perspective, have KPIs that essentially were signed off on both ends or both parties, and as well as comfort for us to hedge our risks a little bit. We're just not looking at potential, but we're looking at actual numbers and the potential of getting there.
So, if I'm understanding correctly, you guys essentially syndicated the whole rest of the round as well with your partners. Is that correct?
A good chunk of it. We had existing investors that jumped on, in a few angels. But yeah, basically then was, Correlation jumping on with that nice thing where it was, hey, we're going to match the check size. That helped take a good chunk of it. And then I think Magic Ventures was another one that you guys brought to the table there, which was awesome. But yeah, it was the existing investors, angels, and then FF helping syndicate the rest of the round.
Yeah, Andy, how many pitches did you even go through? I'm trying to remember.
Oh,
after we put in even the lead term sheet in.
I don't even know how many. It was a lot. So I think that was one thing FF, Nandini specifically was hustling. to get this round filled. And so there, right, I think some of the concerns they mentioned on top, I think some funds took the approach where it's just like, if it starts with the L word, lending, we're out. It's cool. But I think that it was a tough thing to get over. So, I think we made a lot of friends, but, not a lot of friends that wanted to necessarily put the money in. So it was still, it was uphill, but, we got it done. Took some time, but yeah, Nandini was like, that was one of the things that I appreciate even now. And then was just like, awesome. Instead of me doing all this cold outreach, it's more of, hey, I think these funds are great. Nandini, can you get me in? And like that was cool. A very cool and like a very helpful thing to have as part of the team.
Yeah, that's amazing. And so for both of you guys, actually curious how you thought about the rest of the round, whether it be who you're bringing into it strategically, what value add they had that was maybe complementary to you guys at FF, and on your end, Andy, as well, of what value add, again, complementary could they add that would help propel you guys to the next level.
Yeah, I think for us, I tried to open a lot of doors for Andy that were in CVCs and corporates. I know he ended up talking to Vanguard, Visa, Fidelity, just the ones that I remember right away, but just a lot of funds out there. And they felt that the traction of Benny is just a little bit too young at that point. And corporate venture arms tend to go in a bit more when they have the ability to do a POC right away, or they're already working with the mothership. So it was harder in that moment, even though the doors were open. As Andy said, they made friends, but the money just wasn't coming in at that point. So it was like, okay, well, we are a fintech first fund. We've done a lot of work in this space. We kind of just need cash to kind of fill this round out and have Andy go back to business and start building instead of spending a lot of time, fundraising and just tying loose ends. So we ended up going to Correlation, which have been a great partner. I mean, as Andy raises his next round, if he chooses to do so, I think Correlation having the reach that they have will be super beneficial. And then with us being on the board, I feel, and then Matchstick as well, it's been a good balance of Matchstick being one of or the people who originally made the bet to know how fast and amazing Andy has grown as a founder and Benny as a business from when they first made the bet to us to being like, okay, you've got here, now let's push you even forward. So I think it does give a good balance for a first time founder for us to coach him and constantly push him. I think for our next round, and if Andy chooses to have them, I think having some corporates or for the Circle Fund or somebody who has the deep industry background and can open even more specific niche doors could be beneficial, but time will tell.
Oh yeah, I was just going to second that, right? I think we had a level of optimism for the corporate funds where it was just like, yeah, this makes a lot of sense. But I think one is like, some of them just wanted to write bigger checks. Two was, traction. Three was, we were trying to do it fast. And it was just like, oh, we're moving too fast for you, which, later was like, oh, we actually weren't. But it was just like, it's going to be like a 4-month diligence process. And I was like, okay, like we're trying to close before then. So, right. I'm not sure if there's a learning, but it was, I think optimistically we would have loved, I think there was that strategic investor in a corporate. But I think just with the time and just like get back to work, like that's really what I wanted to do. And it's like, okay, funding, let's prove it out, build the relationships, and we can go back as we've grown and raise the funds, build relationships with them. And in the meantime, because that's a lot of times I think what these corporate funds are looking to do too. All investors build a relationship with the founders, and so that was kind of the audible-ish that we called, where it's just like, let's get the money. Everyone's going to bring value to the table that's doing this, and then build those relationships over time. So the next time we go out and do this, we're ready to rock and roll.
Yeah, I mean, what a value add of just don't worry about the rest of the round. We'll figure it out, and you go back to building the business because that's only going to benefit us all. That's amazing. I love to hear that. Well, you mentioned those few, I want to say maybe angel checks who were waiting for the lead. Did they all make it in, or not so much?
Yeah. So it was cool because like the angel that actually reached out, it was ended up being him and kind of a collection of his friends and family too. He was like, dude, I had this, like, he reached out randomly. He saw it and he was like, I had this idea. Like, he's a corporate finance guy. And he was just like, I just never had the gall to do it. Or like, this just makes a heck of a lot of sense. I've always thought about it. And so we had always just kept in touch, right? Of just like, anytime someone reaches out, the contact us form. If they don't think the founders, looking at those, and on a 5-person team, like, you're wrong. Like, I see all of them. And so, yeah, so like that definitely like was saving a place for them. And they were the first ones to say, yeah, we're soft committed to this. And so there was no way where I was, not gonna have them be in the round. So yeah, by being the first ones to say yes and uniquely actually getting the problem, they were a great match for us.
Yeah. And rewinding here a little bit, because I always love to hear this from the founder's side. How did you feel after that first meeting? And did they give you any indication of, hey, this went really well, we want a second meeting? Did they tell you that at the end of the meeting, or how did that all shake down?
One of the things Nandini reminded me of was John was on the call. So that was one of the things that was kind of confounding me a little bit. I'm like, why is John the partner on this first call if this is like a competitor analysis? It just wasn't, it didn't quite make sense. So that was just to kind of go back to your earlier question. One of the other things I was thinking about. But yeah, I left that first meeting feeling pretty excited. John was on the call. I think there was great conversation, great energy in the room. I liked the overlap I saw with the portcos. I think we hit common ground. So I think the action item coming out of the meeting was I was going to send over additional information. So I think I shot over like the preliminary data room, an updated link to our deck. Within that data room, it had like the very preliminary stuff, but I think I might have even went a little deeper, like impact metrics, our cap table, finance, like preliminary, like we're a pre-seed company. Okay, sure. If you want to, there's nothing like super special in these. Here they are. And then the next day I got a message, an email from Nandini, and like they wanted to schedule a follow up for that Friday. So I didn't have to be on pins and needles too long because like a lot of the other conversations I have definitely was just like, okay, are they going to follow up? Like, okay, I'm going to follow up again. And so it was really cool when they followed up and they're like, okay, I think this was at the beginning of the week. And they're like, what are you doing Friday? Let's get some time on the books. And then I think it was that same situation where they brought on the second partner, Alex. And like we hit it off too. And it was, again, like right after that, sent them over more information of like how we're doing, kind of that same day email correspondence. Just be like, yeah, I'm into this. I'm not going to pretend like I'm not. And so, yeah, I think I felt good, or I only had a little bit of time to ponder if they were actually interested, which is cool because like time is precious.
Yeah, and Nandini, how did you feel? Obviously, there was action items you wanted to see. The data room. Was there anything specifically you were looking for, or what were your personal feelings like after that first call?
Yeah, I think there are a couple things. So one, as East Coast investors, I think we just care about numbers a lot more. So for us, it was like, hey, okay, you're saying you return this money. And it's like also like walking through numbers sometimes on a Zoom call. You're like, wait, so you're giving this loan, this is the interest, but what about this? So we're like, hey, just send us the model. We will look at it. We will like try to get our also because again, it's a asset class that's not very widely known, and it's something that Andy I think has trademarked, right? Of a little bit of his own kind of financial product. So we're like, okay, we don't completely get the unit economics to be working. We want to make sure what you're saying is the truth. It sounds too good to be true. So can you just send us that? And the second thing that I would like to talk about is we sometimes get on a lot of calls with founders, and the founders just start like maybe because of the amount of volume of calls that they're doing, or the time of the day, the mood, we really try to give a lot of just a lot of emphasis. Things happen, life happens, but sometimes we get on these calls and the founder themselves, as they're explaining their story, they're not excited about to talk about their own business. We're like, well, if they're not excited in these 30 minutes, then how am I supposed to get excited about this? And Andy's energy is very infectious. It really makes you feel excited about his future and the company's future and his commitment to making this company work. That really stood out to us, and it felt like we will truly enjoy having this 10-year relationship, if or lesser or more, with Andy. And as venture investors, we are in the market of being supportive. We are in the market of having outsized returns, but as a fund that's 16 years old, we have learned a lot about how venture companies usually behave along their life cycle. It is not really a 5 to 7 year explosive growth. Every company behaves like this. There are tough conversations, tough times. There is a lot of companies that tend to stay longer in the portfolio than 10 years. And knowing that going in, we will be significant parts of each other's lives. Keep it almost your dating analogy here a little alive, Andy, but it felt like this is a relationship that we want to be in.
Oh, I love that. And so I know this was kind of a unique situation where you guys reached out, but for founders out there, what gets you really excited about if they are reaching out cold, or what tips and tricks can you give them to get on your radar and hopefully get one of these first calls?
Yeah, I think it's a combination. Founders who do a little bit of diligence either in the person they're writing to. So if they're writing to me and they mention something about my startup or my background, that always piques my interest. I'm like, okay, you did your homework. Or two, it could be around them doing some kind of, if it's an ask that's not even fundraising related, but it's maybe to connect to a portfolio company of ours. Just to be like, okay, I get it. Maybe you are interested in funding at some point, but that's not really why you're reaching out. But as we have our companies go through diligence and go through other fundraising processes, one thing that I always give as a special sauce is of like, just make that pre-partner investor's life easy, because they're your actual internal champion. And if you can kind of almost help them write the memo, or if you can put together your memo because you know your story best, and if you can kind of put that material yourself and do a little bit of the work for them, then it just like knowing that the questions and anticipating those questions before they're even asked, then that really tells about the preparedness of the founder to get those sales decks out there, or just even just be very empathetic to the audience that they're appealing to. So from a true fundraising process, just make your pre-partner investors life easy, and they are bound to push you forward and quickly into their process and do what they can.
Yeah, and Andy, for any founders listening who are, maybe at the pre-seed stage, just starting the fundraising process, what advice would you give, I guess, yourself about this process, and either your strategy, things you did well, things you think you could have improved on? We'd love to hear about that.
Yeah. So I think one is CRM, right? Build something that you can actually use to track who you're talking to. How did you get introduced to them? What were the notes? What were the takeaways? Because when the going is good, right? I was lucky. I had Matchstick Ventures helping make introductions. I had Nandini at FFVC making introductions. And my learning was I could have been better on the follow-up, on the follow-through. And so CRM to track where investors are, how I got introduced to them, what, like actually going in onto the site, what do I care about from them? What am I going to pick out and make sure I talk about when I talk to them? So it's like whichever fund, and it's like, okay, you said this one thing on this blog post. It's back to what Nandini said, where you get to know who you're talking to. If they're writing blog posts, like definitely read those blog posts, reference those. Like, to me, like that's no brainer stuff. Plus, it's probably pretty interesting. That's one, build the CRM. Two, get it, like care about who they are and put information in the CRM and make sure you actually use that information. Timing would be like the third thing I'm thinking about. I mentioned to it a little bit earlier where we had kind of kicked it off like late September, didn't quite build the momentum we needed to by November, December timeframe. It kind of shut things down. So we had to rebuild the momentum up. And then it was, I think a lot of times as founders, you hear this is a very common approach, is like try to build that demand to all peak at a certain point in time. So if you are able to kind of funnel meetings into a single couple weeks instead of just taking them all as they come, then you get to drive that demand, right? You get to create all of a sudden you have all this supply, like, okay, we have competition. And that can benefit the founders from a dilution perspective, and a getting things done perspective, right? If there are other investors who are trying to get things done, that's a really good reason for another investor to move faster. And so that isn't something we necessarily achieved, but in hindsight, what I really wish we would have pushed for instead of, right? Because we were just like, meeting, take it. What's the fastest time I can talk to you, Daniel? It's like, no. Like, be more strategic about the timing of those. Let me push you out 2 or 3 weeks, and then make sure like I have it all presented. Make sure we're back to back and I'm polished, and it's just like bing, bing, bing. So those are the things as I think about for the next fundraising. What I'm concentrated on, building out a process, creating that demand, and then I think that drives to a shorter execution time. Is my hope.
That is very, very beneficial, Andy. I'll just do a shameless plug here. One of our portfolio companies is Founder Suite, which literally helps founders do their CRM management, especially as they're going through fundraising. They just launched a new product for VCs as well for their LP fundraising. But there is a company out there that is founder first for fundraising management. So Founder Suite, go check it out. And
I've actually used them as well, and can vouch for it. So they're fantastic. And Andy, to your point about building momentum, I think that's actually a really great strategy. It's like you don't, as a founder, you don't want to send an investor your Calendly and you're just wide open, right? Because it's like, okay, is there no interest here, or what is going on? So yeah, I think that's a very good and unique way to look at it. Well, awesome, guys. So as we're wrapping up here, Andy, if there's any investors out there for your next round or potential customers, what's the best way for them to get in contact with you?
You can always come to the website, which is heybenny.com. Start chatting with us there. You can also find me at andy@heybenny.com. And yeah, more than happy to talk to folks. Even if you're another company that's looking to raise, always happy just to share thoughts of like, hey, here's what I would have done differently. Don't necessarily follow what I did, but learn from what I did. And I think that's the best way to get to us. If you're a lending partner, we have our lending partners page where you can kind of fill out if you're interested in kind of taking on this asset class. Happy to talk to you. And Daniel, really appreciate you having me on.
Yeah, of course. And Nandini, if there's a founder out there that thinks they match your thesis at FF, what's the best way for them to get in touch with you?
Yeah, you can find me on LinkedIn, Nandini Agarwal, or you can reach out to me at nandini@ffvc.com. And we also have a newsletter that goes out to about 30,000 people every 2 weeks, where we have a lot of gives, asks, and news. We just did the 200th edition of this bi-weekly newsletter. So if you're interested in keeping in touch with us and knowing what musings are going on in all our heads as investors and general humans, please feel free to subscribe and stay in touch with us.
Yeah, sounds like the easiest way to get a talking point to pique your guys' interest is following that newsletter. So, well, fantastic, guys. Thank you guys so much. This was super fun, super insightful, and really appreciate you both taking the time to chat with us today.
Of course. Thank you.
Thank you, Daniel.
That's a wrap for this episode of Inside the Deal. We hope you learned more about how these rounds really come together.
You're also invited to check out PIN, the easiest way to invest in startups with your community, whether you're accredited or not. Learn more about us at getpin.xyz.
If you enjoyed this episode and are looking for more venture content, make sure to check us out at sandhillmarkets.com. We run a weekly newsletter, live events, investor syndicate, and other great podcasts like this. Thanks for tuning in.